You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. And man, it is going to be a wild one today, listeners. Strap in. Should be a good time here on This Week in Futures Options. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you folks are binging. Reminding you a couple of things. You should be listening to the full network. That's how you get the sibling program to this show, the Futures Rundown. Comes at you every Wednesday. Get the full network. You'll get all that fun. And then, of course, you want to go above and beyond. You want to join us for Options Oddities, Pro Q&As, live streams, giveaways. Congrats to Douglas Broom. I believe it's with an R. Congrats to you for winning the March Pro Trading Crate. You want to get your name in the hat. You want to be a winner too, listeners. The optionsinsider.com/pro is the place to go to kick off all that fun. As we kick off our fun here on TWIFO, see who's joining us on the old CME Group hot seat this week. I'm pleased to welcome back on our old pal, Mr. Scott Bauer from Prosper Trading Academy. Scott, welcome back to TWIFO, sir. We got a hot one today. Scott, can you hear me, sir? Tell you what, listeners, we will work to get him back on, listeners, as we head on into a little bit of the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down what's lighting it up to the light side and to the dark side this week. And if you expected a dark side dominated week, remember, this is a This Week in show. So we go all the way back to the end of the show last week. So lots happened since then. Of course, a lot of red on the screen today and recently, but not entirely red, which is why if you look at this chart that we tweet out right before the show, listeners, you'd see it's biased towards the red. I'd say it's roughly 60-40, maybe even 65-35, red over green. It isn't all red all the time like you might assume, like the headlines might be making you assume, given everything that's going on out there today. All right, second time's the charm. Let's see if we've got Mr. Scott. Sir, can you hear me?
I can hear you loud and clear.
All right, there we go. The magic of technology,
right.
sir. Isn't it wonderful, Mr. Scott? How are things in Prosper today, sir?
We're a little bit busy, just like everybody else is. It's, trying to keep people's nerves in check a little bit and focusing on the opportunity at hand, which there's plenty of opportunity right now.
Well, you didn't know when you signed on for the show today, you'd be grappling with a 4% downside in the S&P, sir. So thank you for taking some time out of some madness to join us. You think you can handle a little bit of movers and shakers, or is that too much for your technology woes today, sir? You know, I will spare you. I will spare you having to deal with that, Mr. Scott. I will break down the movers and shakers out here for you this week. Remember, listeners, this goes all the way back to the end of our show last week. So if you're saying, why is there any green at all? That is why, listeners. Let's go to the light side first. Let's go to the green. Let's start things off in a optimistic fashion, shall we? Let's go number 5, kicking it off in FX. It's the yen USD up 2.78%. FX has been very much in the crosshairs as all this tariff and trade war talk has kicked up. The yen kicking into the number 5 spot today. Number 4, to the rates we go. It's the 30-year up 3.32%. Number 3, it's the ultra 30-year up 4.09%. It was number 5 in the other direction last week. So keeping it in the rates for 4 and 3. Number 2, going to the world of energy, it is nat gas up 5.11%. And the big dog out there to the light side today, listeners, it is soybean oil up 6.17%. It was number 3 in the other direction last week, up a paltry, a meager 3.7%. All right, to the downside we go now, listeners. There's a lot of it. There's a lot of dark side out there to be parsed. Let's go. We'll expand it because you might be thinking, especially today, if you're coming to the show, very much focused on the equities. So let's expand our bottom 5 a little bit, listeners. Let's go all the way out to number 16. That's how far you have to go to find the E-mini out there today. It's number 16, off about 4% since our show last week. Also off about 4% today. So pretty much all that downside coming today, listeners. Number 11, if you want to go a different flavor of equity, we've got the S&P Midcap 400, off about 5% since our show last week. Number 9, we got the NASDAQ sneaking in there, off 5.2%. If you're a crypto head, Bitcoin off 5.6%. And then number 5, our actual bottom 5 there, listeners. It's the E-mini Russell 2000, off 6.48%. Number 4, the tech sector of the S&P, off 6.64%. Number 3, silver, coming back down after getting some love out there of late. It's been a good year for the metals so far, at least the precious stuff, but giving back a little bit this week, off 7.3%. Number 2, class 3 milk, off 7.3%. And the big dog out there to the downside this week, a bad week for dead trees. Lumber off 10.1%. Let's kick it off into the realm of C-vol. We go. Obviously, a lot popping off on the vol front. If you want to deep dive into equity-specific vol, listeners, tune into Volatility Views tomorrow. Should be a good time. But right now, listeners, going into the C-vol, we've got FX C-vol at the top of our list. 9.59 is where we're coming into the show. Again, FX very much in the crosshairs right now. Moving almost half a point just today, 0.43 today. That is also the high for the week. And we're kind of all over the place on the C-vol this week, which is fascinating. That is the high for the week, the low 8.35. So we don't get roughly a 1.25 point move in FX C-vol very often. So that should show you that something interesting and or aberrant is afoot out there in the realm of FX, which is what happens when you kick off a global trade war. Right below it, listeners, we've got metals, 20.13 today, listeners, up about 1/3 of a point. Obviously, metals looking spicy out there, listeners. That is also the high for the week, the low 16.61. So about a 3.5 point range on the week for metals vol, which is also pretty action-packed. And now we come to the ags, the ag product C-vol, 20.37, kind of unched today. That is pretty much the low for the week, the high 21.61. So ag vol going completely the other way, listeners, pinning the needle to the downside this week. So got 2 to the upside. Now we got 2 in a row to the downside because below it we have the aggregate commodities CVOL 32.88, off about 0.21. That is also the low for the week. The high 33.37. So once again, CVOL kind of all over the place this week, which is what makes it fascinating. Then we come to the treasuries, the treasury price vol, listeners, 6.4, coming in a third of a point today. The range for the week, 5.87 to the downside, 6.72 to the upside. Almost a full point range for treasury price CVOL on the week. That is also somewhat surprising. And again, you don't see that too often. That is because we are in the midst of a lot of macro madness going on out there, listeners. So you're going to see some action in treasury vol, and that's what we're seeing today. Below it, we have the energy CVOL 46.08. That is the low for the week. So energy vol coming back down the other way. The high was 48.96. Obviously, a decent move to the downside. In energy vol, maybe more downside to come. We shall see. And then at the bottom of our list, we've got treasury yield vol 118.42, off over 6 points just today. 6.09 points just today. You might be saying, oh, I must be pinning the needle to the downside for the week. You would be wrong. 124.51 was the high. 108.78 was the low. So we're actually towards the upper band of our weekly range in treasury yield vol. So a weird topsy-turvy week on the CVOL, not perhaps as biased in one direction as you might assume, which is what makes it interesting, which is why you got to tune into TWIFO every week, listeners. But I know a lot of you are coming to the dance for equities. I know Scott's all fired up about some equities. I'm sure a lot of his clients and mentees are as well. So we're going to kick things off there first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, a wild time out there in equities as we're kicking off the show, listeners. Just a meltdown post-tariff. S&P off over 4% just today. NASDAQ off about 5.25% just today. Dow off about 3.25% just today. And just for good measure, we were lamenting it on the option block earlier today that vol not getting perhaps as much of a lift as you might assume. Almost 28.5 now, so ticking up about a point from where it was on the option block. And it got as high in VIX cash at least of about 29.25, 29.3 earlier this week. So interesting stuff. Scott, a lot of spice out there in the equity markets today. What is catching your eye in a whirlwind of downside, sir?
I mean, everything is catching my eye today, but the biggest ones to me are some of the financials. And obviously, the Mag 7, which has been out there for quite a while, but the financials, especially the JP Morgans, the Goldman Sachs, Morgan Stanley, these things are just getting annihilated, and they are down, especially JP Morgan, down to a really, really significant area, the 200-day moving average, which that thing bounced off of it just 3 weeks ago or so, but hasn't seen the 200-day moving average in a year and a half. So, with looking at what the 10-year is doing, rates are doing today, these financials are just getting crushed. I actually think there's some opportunity there.
Well, I just took a glance while you were talking, sir. The financial sector of the S&P, we have futures on those, not options, listeners. Obviously having a rough week, not as rough as you might assume, but 3.65% to the downside. Do you trade those at all, Scott? Are you a sector guy?
We do trade some of the sectors. We don't trade the financial sector per se. I kind of stick to individual stocks. I'd rather do that. I mean, we definitely trade other indices, other ETFs, but when it comes to the financials, consumer discretionary, we typically look for individual stocks.
So obviously a lot of folks want to know what's going on out there on Prosper on a day like today. We're bleeding red in the major indices. Is that what you're doing? Are you looking for a little bit of bottom fishing in individual names? Are you trading a lot of 0 day in the indexes? What's lighting up your tape today, sir?
we're not trading the 0 days. I'm really focused more on these stocks that are in very, very large oversold territory, but not just that. Some of the stocks that are down to significant support areas, whether it be from a big gap fill or a 200-day moving average or something like that. And what I'm really looking to do is combine that with selling premium, selling volatility, because we know where vol is right now, and especially in the individual stocks, we are seeing some really, really extreme levels where, you know what, if you're willing to put out some credit spreads, and I will only trade spreads, I'm not trading anything naked here. Credit spreads, boy, you can really, really collect some nice premium right now.
Yeah, a lot of interesting stuff out there. If you're willing to step into the frying pan, take some of the heat out there today, Scott. There are some interesting things out there. Well, listeners, we're hanging out right now, obviously, in the S&P melting off 4%. Are you down with that? You think we're oversold? You think this is maybe the beginning of the bounce? Is there more to come? Might be a fun question of the day or the week. We'll probably get that out to you later. It's probably more of a question of the week type thing, so maybe we'll get that out for you next week. But a lot to analyze out there. Sometimes on days like today, Scott, analyzing the S&P E-mini options is a bit of a fool's errand. I will attempt to do so for you nonetheless, listeners, because I am a glutton for punishment. I am steering into the vortex. I am looking at the code of the matrix right now, listeners. There's a lot of papers, you might imagine, going up out there today. You can see this for yourselves if you go to cmegroup.com/TWIFO, go down to that equities report. You can see all of the E-mini palooza, all the fun going up out there right now. Nearly 4.5 million contracts on the tape right now. So, spoiler alert, the show is not long enough to break down all 4.5 million contracts. Also, if we were to do that, as I've lamented many times, we'd have to filter out a lot of noise to get the signal, including, about 70,000 just this morning of the 4,700 puts expiring today, or expiring tomorrow, 75,000 of the 4,300 puts, and so on and so forth. There are hundreds of thousands, nigh on 1 million contracts going up in that noise. But I know a lot. In fact, if you look right now, listeners, we said about 4.5 million contracts this week. Almost half, that's kind of what we've come to expect. Almost half of that flow is expiring within, let's say, about 40% going away in today. If you add today and tomorrow together, so a full 24-hour cycle, you're getting close to half of that. And then if you add on another 4 days beyond that, you're getting up to about almost 50%. So again, it is a very near-dated product. So it's kind of hard to talk S&P without talking some of the wild 0-day stuff. We could obviously do a whole show just on that. Some fun ones that kind of came across my radar, Scott, that were kind of interesting. A bunch of the 0-day, so expiring today, listeners, par puts, not 5,400 or 5,500, 5,000 puts going up this morning. It might have been a bit of a reach. It probably went up when we were close to the nadir this morning, right around 5,400, threatening to break through it, listeners. I don't know if we were ever really seriously threatening 5,000. I don't know how serious this trade was, but they went up for about a nickel. Looks like about 4,000 times this morning. So maybe somebody feeling their oats, maybe somebody taking a quote-unquote risky sale out there. Either way, a lot of that kind of fun going up out there today. 5,400 puts were pretty active today, Scott. As you might expect, we kind of threatened that strike earlier today before bouncing off of it. We are starting to trend a little bit lower again, so maybe we're going to threaten it again. Looks like we got as low as in the teens, 54.16 in that level before kind of bouncing off. So when we got down there, obviously 5,400 puts were kind of hot, including listeners. Yeah, those puts, other puts traded for a nickel. Then we had the put spread trading this morning, 5,400, 53.5. Went up quite a few times this morning for prices around 265, listeners. So again, not nothing. If you were paying that was a bit of a spicy meatball. Now then again, the day is not over. We could easily break through 5,400 and have those puts come roaring back to life here, listeners. But as of right now, you're probably wishing you sold that. But even if you did, you're probably sweating it, unless you took it off by now. But interesting stuff out there. If you want to go all the other way, Scott, to the upside, we had some upside flyers this morning as well. It seems like 57.5 was the name of the game. Those trading, thousands of those this morning for prices around a dime, listeners. So that we were, after, the speech last night, we were kind of threatening some of that territory. So it might have seemed like a decent do, as the kids say, to pay a dime for those bad boys. Are you overwriting those for a dime? That isn't, in a day like today, that way lies madness. So Scott, as you might have expected, we got a bunch of 0-day craziness going on out there. If you want to go a little bit longer term, Scott, how about this? How about, this one brought a smile to my face. The June 3,400, 3,000, yes, listeners, 3,400, 3,000 put spread traded 2,168 times this morning for, at its apex, close to $3, $2.95. Again, past his prologue, folks are probably picking up the nickels, or in this case, nearly $3 ahead of the steamroller. But Scott, does any of that 0-day fun, or perhaps going all the way out to June, the 3,400, 3,000 put spread for around $3, any of that float your boat, sir?
Not a chance. I'm not touching that with a 10-foot pole. I definitely see it on the tape. Really, really interesting. To me, that is probably some big institutional firm or another, hedge fund, maybe just trying to buy some downside just to avoid some margin risk. That to me is what that is, but I want no part of either side of that.
And are you mostly focused in the S&P these days? Do you sling a little NASDAQ, a little RUT? What is your poison of choice in the index world, sir?
We actually have some RUT on right now because that, to me, presented the most opportunity from a vol standpoint as opposed to the NASDAQ or the ES right now. But we're looking at everything. We look at the levels, and this area and the RUT right here is a real interesting area. This has to hold right here. There's some support here. There is definitely some support here, and if it doesn't hold right around here, I think there could be a pretty big move to the downside here. But just looking back here, this somewhere between 1910 to 1920 area really has to hold.
So are you harvesting some premium in RUT? Are you maybe betting on a little bit of a breakout to the downside or a rebound to the upside? What are you up to out there?
Well, we actually did what's called a strangle swap. We sold some Primo in the RUT that expires tomorrow and bought some Primo against it next week. So little upside down gamma wise, as you'll understand, and some of the listeners might understand, but boy, there is a heck of a lot of premium that is due to come off by the end of the day tomorrow.
Strangle swap, Scott. I haven't heard that since my SPX days when I used to have to
being on the floor. You got it.
I used to hate the guys who called up for all the various strangle swap and iron condor swap runs so they could set all their books and we could do all their heavy lifting for them. I used to hate those guys. So now, congratulations. Exactly, you're right. One of those guys, Scott. Congratulations.
I'm on the other side of that now.
Well, let's look at the RUT a little bit right now, listeners, because it is an interesting product, as Scott alluded to. Some interesting levels. 1934, when we came into the start of the show, off 102 handles, or a little over 5, about 5.05%. That's just since Monday. If we go back to the end of our show, a little bit of a different story. Now, RUT, obviously a little bit more of a targeted options product. You're not talking the 4.5 million you're seeing in the E-mini. You're talking about 40,000 this week, listeners. So kind of interesting out here in RUT land. What was going up, let's see, about 15% going up in the contract expiring tomorrow, 10% expiring today. Again, RUT not all 0-day, which is kind of interesting in the equity landscape right now. What did catch my eye out here, Scott? Looks like the big dog this week actually was the 2,200 calls going up in June. 1,800 times this week. June, listeners, they have 77 days to go. What is the vol in June RUT? You might be asking, listeners. June small caps, 27.11, up about $4.50. Skew-wise, I got so busy in S&P I didn't even break down the skew, listeners. Spoiler alert, the puts are bid, the calls are offered. There you go. You got that here in RUT as well. The puts last week were 11.5% bid. We obviously have sold off since then, so it makes a little sense. We've come in down to 10.1% bid. Still rich, but not quite as rich. The calls last week, 8.6% bid, or excuse me, offered. This week, 9.8% offered. So again, kind of interesting stuff out there in the rut, but it was the June 2200s, listeners, going up for prices, Scott, looks like around $14, $13.90. You know, that would be interesting. Like, looking at the way this skew lines up, it has the whiff more of maybe a bit of an overwrite because those calls that skew getting a little bit more crushed this week as opposed to bid up. But I don't know, Scott, 2200 level in June, around $14. I guess, gun to your head, would you be a buyer or a seller of those? Obviously, you'd spread it off against something else. You don't have to be naked.
Yeah, I would definitely be a seller and spread it. And a seller, not because RUT can't go up there, but just because vol is so big. There's a lot of vega to that, a lot of vol risk. I'd rather be short that, but certainly I wouldn't be naked short that. Like you said, I'd spread it off against something else.
Yeah, that's an interesting one, listeners. $14 for that level. That level, are you a seller? Are you a buyer? You think RUT can get back north of there or even threaten that by June expiration? Heck, the way these markets swing, listeners, we could be threatening it tomorrow or next week. Or we could be a distant rear view mirror by tomorrow out there, listeners. That's what makes RUT kind of interesting. I mean, I love the 0-day tsunami that is the E-mini, but it's sometimes nice and refreshing to dive into some other waters. Anything else in equities catching your eye, Mr. Scott, or do you want to roll on into another complex?
Yeah, we can roll out to something else. You know, the commodity space is really, really active. Obviously, gold and silver, but even some of the other commodities. So let's roll out a little bit.
All right, you mentioned the hot stuff, the metals. Let's head out there next, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, let's do it, listeners. We know a lot of you are getting precious this week. I do see in our pro chat some of you folks talking about metals. Yeah, it is an interesting week to be looking at some of the metals. Not that long ago, doesn't seem like that long ago, and it wasn't. It was a few weeks to maybe a month. Folks were saying, man, can gold break out? Can it hit the 3,000 level? Can it possibly get up? Well, yeah, we're well past that now, listeners. Multiple new all-time highs since blowing through that 3K level. 31.27 when we kicked off the show. Up another 13.5 points, or about 0.5% since the Monday show. Let's see, in terms of gold, sometimes, listeners, it is hard to find exactly where that one's lining up. So I will dig for a little bit. Looks like gold, if I had to, looking at this chart, looks like on the week, it probably would be around number 11 or 12 for us to the upside, up about 1.5% since our show last week. So obviously a good week, but not as spicy as something like a soybean oil, up over 6% this week. So a lot going on. Over 500,000 contracts in gold, by the way, this week, listeners. Nearly 600,000. 581 on the tape. So volume-wise, gold is definitely outperforming. Usually a good week, 200, 250, maybe 300,000 if things are getting wild. Nearly 600,000. That means a whole heck of a lot of you are out there trading the king of the metals. Mr. Scott, what's catching your eye in a hot week for the metals, sir?
You know, this morning there was such massive opportunity early today. If you saw where gold opened, even pre-market, and it has been nothing but straight up from there. It's backed off a little bit off its highs, but wow, what an, obviously in hindsight, an overreaction. But we were out there aggressive in gold this morning. Silver also, but silver hasn't rebounded during the day like gold has. So maybe gold is, right now doing that thing that it usually does, where it's tried and true, safe haven place to go for people. But Gold is, I'm not one to buy into these rallies, but I've been buying it on the dips. And I've been saying that for a while. So, we get a nice run here. I'm not buying into it, but on a dip, until that narrative changes, you gotta look at that.
A lot of people come on the network over the last month, Scott, and take, let's say, a not exactly bullish note on the precious stuff, in particular silver and gold. Obviously, both of them have done pretty well. Silver, like you said, not exactly outperforming like gold today to the upside. But it sounds like you're taking the other side of that. You're a little bit more bullish, at least on gold, sir.
Only on a dip. Only on a dip buy. I think you got to be really cautious here, like we saw over the last couple days. But it's still a buy the dip, where much of the rest of the market is a sell the rip. Gold is still a buy the dip.
All right, listeners, let's see what they were up to out here in this massive, nearly 500,000 contracts worth of paper. I'm trying to find prices for this one trade, and for some reason, listeners, it doesn't want to play ball with me. Oh, you know what? Because they went up on Monday. That would be the case. Let's go find those now for you, and I can see if I can get some actual price. There you go. That seems too cheap. Is that what we're looking at? All right, let me dig into those a little bit, listeners. That seems like a screaming deal. But we'll dig out here, listeners, what's going on out here in gold. Like we said, 500,000 contracts on the tape. Of that, about 34% going up in the June contract. Has about 54 days to go. So we know traditionally when we talk shiny stuff options here on TWIFO, it's usually a little bit longer term. It's usually biased to the upside. We also usually know the skew is pretty biased to the upside. And going out to June, let's see what the case is out there. What is the vol first off in June gold? Nearly a 17, about 16 3/4. That's actually decent, all things considered, for gold. I mean, precious metals not exactly super volatile. Up 1 1/4 points this week. In terms of skew, last week the puts were about flat. This week they're 1.8% cheap. So just the fact that the puts were flat last week is kind of interesting. Usually we see a discount to those. So kind of flat, kind of interesting. This week only about 2% discounted. The calls last week 2.5% rich. This week 2.8% rich. That's also kind of interesting. Kind of reflecting that we're not seeing, at least right now in the skew, a huge premium to the upside. Usually we see, 7, 8, 9, 10% premiums to the upside, if not more, in gold. And if we go a little bit farther out, we do see that. If we go out to next year, let's say into February and March in particular seems like it has about 9.5% premium to the upside. Remember, that's the amount of implied vol in that 25 delta call versus the at the money, the 50 delta call. What difference there is there? So nearly a 10 points difference. That's more along the lines of what we expect. So the fact that June is, I wouldn't say flat, but 2.8% difference. Not a huge differential out there in the skew realm. So maybe have we reached a little bit of near-term equilibrium? Far from me to call a top in gold. I would never do such a thing, listeners. But maybe, at least skew-wise, I will say we're not seeing the calls as rich as you might expect. We've also seen a big move to the upside. So some of that call wing might be collapsing just as a natural result of that as well. But it was the 3140s going up in June this week that led the tape out here in a very, very spicy week in gold, listeners. 3140s going up about 15,300 times. Almost all of that going up on Monday, Scott. 14,400. And I was trying to find prices on these, Scott, these June 3140. I show them going up for 20 cents, which with the future at 31.27, I don't know. That doesn't seem
that's odd.
Yeah, that doesn't seem
that's odd.
That seems like a screaming deal if that was the case.
Exactly. I don't think vol was that low.
I would buy those. I'm just saying, I would buy a June 3140 for 20 cents if that was the price. That's what my system is showing me. So it kind of threw me for a loop earlier, listeners. So I need to go dig in a little more, see exactly what is going on out here. I think most of you would pay 20 cents for a 3140. I mean, the future is at 3127, listeners. So not that big of a run out there in gold. So yeah, I guess if you want a screaming deal on the upside in June gold, maybe that's your huckleberry out there. But I wouldn't put too much stock into that price. I think something is gumming up the works here, listeners. Beyond that, we had the 3300s going up 14,000 times. Now you might be saying, okay, it's a 3140, maybe 3300 vertical or roll. But no, the 3300s were trading all week long. The big day was actually today, 4500, and nothing of the 3140s traded this week. So just kind of interesting upside. 3300s, listeners, do those float your boat perhaps a little more? Or we've got, if you want some puts, oh, you know what? Got the 3140 puts going up on Monday as well. So maybe we had a little bit of a funky synthetic. Let's go see if we can find it again. That looks like somebody trading either a straddle or maybe a bit of a synthetic on this 30. Oh, you know what? It did go up as in synthetic. That's what they're showing me. It was, so Scott, it was the synthetic for about 20 cents. That makes more sense.
That is definitely, that definitely makes more sense than just the calls out right
I was
there.
like, buy those all day long for 20 cents. So yeah, that was the net synthetic. Listeners, obviously they're doing a buy, call, sell, put, or vice versa type of trade. All of that going up about 15,000 times, close to it on Monday. 3140 level, listeners. You like that level? Out there in June gold, somebody likes it, to the tune of maybe a little bit of a synthetic action. I'll have to see if I can dig up. I don't think I can get the individual component parts for that. That would be a little bit more informative for you. But either way, that was the big trades. People are talking silver. You mentioned silver. I know our good buddy Uncle Mike likes himself a little bit of silver. And silver kind of coming down the other way today, which is kind of interesting. I know looks like some folks in our chat probably looking at a little bit of silver as well. So let's go out to silver today as well, really quickly, listeners. Silver looking decently active, 68,000. Not blowing the doors off, but also not like 20 or 30,000 like we maybe have come to expect of late. So roughly 2x what we've come to expect, which is kind of where gold is hanging out right now volume-wise as well. So respectable, all things considered. Silver right now at about a 32 when we kicked off the show. Down nearly 3 handles, about 2.8 handles since Monday. That's actually about 8%. Obviously, if you go back to the end of our show last week, we're down about 7.3%. So, Scott, kind of strange that the number 2 precious metal not exactly holding court with the number 1. What are your thoughts, sir?
Well, historically, we're seeing that gold-silver ratio expand even further here. And, if I had to pick between the two, I would be in silver. But, the trend is your friend, right? We know that. And the way the market is trading right now, gold has been the trade to be in on these dips. I do like silver relative to gold here, though, in this market.
Certainly a little cheaper today, so you can't argue with that, Scott. If you want the discount, I guess.
That's right.
I guess you're looking for a little bit of the number 2 shiny stuff. Maybe that's why Uncle Mike was in such a foul mood on the option block. I didn't think about that, listeners. He has his beloved S&P down and also his beloved silver. So he was getting a 1-2 gut punch out there today for Uncle Mike. If you're wondering what is going on out here, and listeners, it's actually nearly half of the paper in silver is going up in May. It has about 21 days to go. It was the 40 calls, listeners. 40 calls in silver, listeners, going up. Looks like about 3,100 times. That was the big dog out here. By the way, what is the volume? Might be asking in May silver, but almost a 29, about 28.90, up about 1.5 points. So similar increase to what we saw in gold. Obviously a higher overall level, not quite 2x. We're pretty close to it than what we see in gold. Skew wise, something similar to what we're seeing in gold. Again, a little bit more interesting maybe. The puts last week, 1.2% discounted. This week, almost 3% discounted, about 2.7%. The calls last week, 3.1% bid. Last week, this week, 4.4% bid. So ticking up a little bit. Again, some of that could be the skew we're selling off, the puts getting cheaper, the calls getting bid. That's kind of what you expect, but also maybe some of that is also kind of what Scott alluded to. Maybe some folks are looking at this and saying, oh, maybe silver looks like a little bit of a discount in this quote-unquote flight to quality madness, so maybe they're scooping a little bit of that out there as well, or at least bidding up the calls, which also could account for this action in the 40 calls out here in silver, listeners, going up, like we said, 3,122 times out there this week, listeners. The big day was actually Tuesday, 1,200 going up on Tuesday. Looks like closing of that 1,200 lot, followed by we've got, about 600 today, 800 on Monday, mostly opening. So back and forth on these 40s all week long. Again, 40 is a distant strike, listeners. We're hanging out on that May future at about a 32 exactly. So these 40s traded, Scott, looks like prices between like about a nickel to about 8 or 9 cents. So it's like maybe we got some upside flyer action. I don't know. Is that a nibble you'd want to take in silver, Scott? The May 40s for about a nickel to a dime?
No, I think there's other things I can get better bang for my buck on, but you never know. Maybe that's the Hunt brothers out there coming back.
There we go. They're back. They're back trading for a dime on the 40s. Yeah, that seems like maybe a bit of a bridge too far. I'm kind of with you. I think I would like something maybe a little bit meatier.
I agree with that. Better bang for my buck.
But there you go, listeners. If you wanted a silver lottery ticket, God knows we've seen a few of those trading this year. Some wild prints in silver throughout the course of this year. I wouldn't call these wild. These are more, shall we say, extremely optimistic. But nonetheless, nickel to about a dime, 3,000 times. Then we have the 39s right below it, about 2,700 times this week. Paper doesn't line up, though, so they're kind of just trading on their own. Almost 1,000 of those going up today. Let's see if I can go back really quickly. Maybe I can get some 39s going up for about 14 cents on average, listeners. So a little bit meatier, a little bit better. If you like to buy some upside, maybe that's your huckleberry. And below it, we have the 36s. Those going up about 2,600 times, trading kind of close to the 39. So it could be some 39. Looks like there were a few verticals, but not on those strikes. Let's go look really quickly, see if I can find what those 36s were going up for today, listeners. Let's see if here we go. Oh, those are June 36s. So if you want June 36s, they traded for about $1.25, listeners. Prefer the May. There we go. The May 36s, 62 cents, listeners, on average for this week. And the 37s, about 34 cents. So, Scott, any of those float your boat more? Maybe buying one, selling the 40s, anything like that? Maybe a fly?
Yeah, I would probably do more of like a broken wing fly that give me a little bit more direction rather than just, a regular equidistant fly. So, if someone's coming in and they're, let's say the 40s here, or that's the one that, people want, I want to sell that one as a market maker. I want to sell that one and buy something against it because I want to sell what people are driving the cost up on. So, yeah, I would look at a skewed call fly, if you will.
That's the only way to do them, in my opinion, sir. Well, Scott, it's a hot day. Let's give the people one more product to digest. Where should we go next, sir?
Oh, man, you had mentioned, I think, soybean earlier. We can go, wow, there's so much on the
it's an embarrassment
so much on the dock.
It's an embarrassment of riches, sir.
Here. I mean, yeah. let's go to some of the grains.
All right.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, let's go to ags. Pop out of silver. Metals all the way at the bottom of the list. Ags all the way at the top of our alpha order list in that asset class drop down. Then we go into grains and oilseeds and product family. Then, as Scott mentioned, there's a lot to choose from here. We've got corn, we've got wheat, we've got beans, we've got soybean oil that's lighting it up. Scott, which of those is floating your boat, sir?
I mean, soybean oil, really. I mean, that's, all right. I don't follow it as closely, but that has been kind of front and center here.
All right, front and center it is. So this shall be front and center for us listeners. I know Kevin Green was on talking about it last week. Soybean oil up a little over 6, about 6.17%. This week, number 3 in the same direction the week before, up 3.7%. So closing in on 10% worth of upside over the last couple of weeks here in soybean oil. If you're saying to yourself, where does soybean oil, where is it trading right about now? It's at about a $47, 47.08 in that front future, listeners. Up nearly 2 handles, about 4.25% just this week. If you go back, obviously, to the end of our show last week, up over 6%. How much paper is going up out here? Pretty spicy week here in soybean oil from a volume perspective. 152,000 contracts on the tape. So that's not nothing. You're talking 2.5x what we're seeing in silver. Obviously not quite what we're seeing in gold, but on a normal week in gold, it'd be about 100,000 less than gold. So nothing to sneeze at there from a soybean oil perspective. And it seems like the lion's share of that paper going up in the May contract that has about 22 days to go out here, listeners. So we'll hang out there as well. What is the volume? You might be asking in May beans It's a 32.42, up about 4 2/3 points on the week. So pretty spicy, roughly 2x what we're seeing in gold vol, obviously, and a little bit more than what we're seeing in silver out there as well. In terms of skew, the puts last week, 2.6% bid. This week, 2.6% discounted. This week, 4.3% bid. So again, nobody wants the puts out here this week, but the calls are where the action is. 3.3% bid last week, 5% bid this week. Can you blame them? The thing's up nearly 10% in 2 weeks. You probably want a little calls in your back pocket when that kind of action is popping off. And what is leading the dance? I said we're at a 47.08 in that front future. It's the 50 calls going up nearly 12,000 times this week, listeners. The big day was Tuesday, 6,500 on Tuesday. Mostly opening. Looks like it could have been maybe a roll up from the 46s. I'll have to go look and see. They closed 4,000 of the 46s that day. So if that's the case, probably sitting on some gains. You might be able to do a house money roll there. About 11,500 of those 50s going up this week. The big day Tuesday. 1,600 on Monday, mostly opening. 2,200 on Tuesday. Looks like maybe some folks taking some profit there because they were closing. 1,100 today against a remnant OI of 4,400. So a lot of back and forth on these 50s here in May in soybeans. Scott, while I look up some prices, what's catching your eye out there in the world of soybean oil this week?
Just this price movement, just the volatility, actually. I mean, we can look at it on CBOL right now, and I believe, I'll pull it up right now, I think we've seen vol really, kind of maybe peak out a little bit, but really, really accelerating.
All right, listeners, if you like those 50s in May, if that kind of spoke to you, if you wanted to maybe take a little bit of a nibble to some upside there, looks like they traded on an average price of 14 cents today. Actually, that seems like that was kind of low. I see some trading now closer to 21 cents up to 25 cents. So maybe it looks like you missed the 14-cent print, listeners. But if you still like them around 22 to 25 cents, then maybe the May 50s are your huckleberry. Also, we had the 46.50 call spread also in May. I said there looked like it might have been some vertical action. Looks like there was, going up for 72 cents. And that looks like exactly how we thought it was lining up out there, listeners. Looks like folks were doing that roll action there earlier this week, which again makes sense. If you're long some of those 46s, you blow through that strike. Rolling to the 50s isn't the worst thing. Doing a house money roll, doing more on that second leg. They did it for around 72 cents. Obviously, they're still feeling that bullish upside because they're not closing. They are rolling to the 50s. So it seems like from the paper we're seeing here, listeners, like folks are betting on a little bit more upside to come here in soybean oil. All right, and that is going to do it for us this week on TWIFO. Scott, we got to let you get back to the folks before the close here so you can put on some more fun as these markets are whipping around all over the place. But before we go, looks like the sell-off deepening out here, listeners, in the equities as we're coming into the end of the show. So maybe those 5,400 puts in the S&P that I kind of mocked for, what were they, 265? I said you might be sweating them even if you sold it. Looks like you might be sweating those right now, Mr. Scott. But before we go, Mr. Scott, if there's any other thoughts you want to leave the folks with, have at it. And then B, if folks want to check out what you and the team are up to over there at Prosper, where should they go? What should they do?
prospertrading.com. Absolutely. We work with our clients live in the markets, in the futures space, in the equity space. Got professional traders like myself. And where would I leave everybody? Well, we got a big jobs number tomorrow morning, so we could get another market mover here. My guess is that number is probably not going to be too strong. So I think we'd be looking at, maybe a little bit of a bounce here. But listen, you can't outsmart the market. You got to trade what the market gives you.
Trade what the market gives you. You can learn how to do that over at Prosper Trading Academy. Listeners, just prospertrading.com, the place to go to kick the tires and light the fires. And of course, while you're checking stuff out, make sure you're checking out our reports over there, cmegroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That is going to do it for us on the network today. Hope your folks are keeping your powder dry. Hope you're doing pretty well, keeping your head above water in these wild markets. If it's a little too spicy for you, I get it. We'll walk you off the ledge here. You're tuning into the right place. We'll be back again tomorrow to break down all this vol. Spoiler alert, there's a lot of it on Vol Views tomorrow. I'll be joined by Dr. Vix and who knows what other special guests. You got to tune in to find out. Should be a fun time. And then after that, one final time for the week, exclusively for all you cool kids hanging out in the secret club with a little bit of options oddities. I see you folks in the chat. You want those 3140s for 20 cents in gold. Yeah, I wish. Got to get the synthetic. Maybe you like that too. I don't know. But yeah, 3140s for 20 cents. That just didn't ring true, listeners. And obviously it was not. So there we go. The keen insight paying off at the end of the day. But we'll see you back here tomorrow for Vol Views, and then for the pro folks for Options Oddities. Of course, if you want to check that out for yourselves, head on over to theoptionsinsider.com/pro. Cool offer going there as well in terms of some other cool services you can get access to exclusively for our pro members that you can kick the tires on before anybody else out there. Really cool stuff. Glad to see so many of you are taking advantage of that. Then we're back again next week all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.